We're looking at this analysis report. Red day for DVLT. Perfect entry before the next leg up.
Right. The core argument is that DataVault AI's recent 7% drop is actually a golden ticket.
A buying opportunity. Yeah. It leans heavily on high analyst targets and the company's big pivot into the AI and data sector.
It's a very high conviction thesis.
It is. So let's just dive straight into the first area where we think we can make this analysis even more robust.
Let's do it. We can start with the foundation of that conviction.
The analysis makes a very confident claim. It says the drop to 145, and I'm quoting here, isn't a crash. This is a shakeout.
And that the stock is sitting right on a major support level.
So to elevate the analysis from a bullish thesis to a robust investment case, the material must define the boundaries between a temporary shakeout and a legitimate negative reversal.
I think that's the key. The strength right now is its prediction. It tells you what will happen.
But it completely ignores the what if it doesn't question.
And that's the weakness. It just dismisses that 7% drop without giving any, technical or fundamental criteria that would invalidate the whole idea.
For an expert audience, that lack of defined risk, it creates a really unbalanced perspective.
Totally. If you ignore the possibility of being wrong, you lose trust pretty fast.
So the suggestion seems pretty clear. Integrate an explicit data-driven section on risk management.
Yes. Identify the specific levels or conditions that would tell you, okay, it's time to stop the trade, or maybe rethink the whole premise.
This shows that the conviction is measured. It's not just blind faith.
Absolutely. And we have to be specific here. We can't just talk about risk in the abstract.
We need hard numbers.
Exactly. Since the whole thing hinges on that 145 support level, you have to define the point of failure.
Right. So a concrete example could be to include a scenario analysis. Tell us what happens if that level breaks. Something unambiguous, like if the 145 support fails and the price closes below, say 130, the technical setup is compromised.
There you go. That 130 number becomes your line in the sand. It's clear.
So that handles the technical side of the invalidation. But this whole story is really driven by a fundamental shift, right? The company's pivot.
The pivot to AI and data valuation, yeah. So is there a risk that by focusing only on the chart, on that technical floor, we might be missing the real danger here?
That's a great point. You have to identify a key fundamental risk, too.
Like what, for example?
Well, the analysis could detail the risk that the new data valuation or Web 3.0 initiative, what if it just fails to generate the revenue they're hoping for in the next 2 quarters?
Right, that introduces execution risk. It shows you're thinking about the business itself, not just the stock price.
And then you can tie it all together. You could frame the whole thing with if-then statements around that 145 price point.
That's smart. You link the technical support directly to the outlook for $162. It turns a simple prediction into a structured, risk-defined trading plan.
Exactly. A defined invalidation point is what turns a strong belief into a professional investment case. Without it, the analysis just feels incomplete.
Agreed. Which brings us to the reward side of the equation.
The sheer size of it.
The analysis uses this valuation gap as its main argument, contrasting the 145 price today with analyst targets as high as $7.
And that's our next point. The claim of a potential 400% upside requires much deeper analytical support. The focus needs to shift from just stating a price target to actually analyzing the rationale behind it.
Yes. The material makes a great case for the potential of the target, but not the reason for it.
And that's the core weakness here. The report is basically relying on the size of that $7 target as the proof.
As if the number itself is the evidence.
Right. But an expert reader needs to understand why. Why does Wall Street think this stock is worth $7?
Especially when you consider that DVLT, just recently pivoted. It used to be a speaker company.
That's a huge leap. If the logic isn't there, that 400% figure just feels aspirational. It's not grounded in analysis.
So how do we strengthen this? The reader needs context for what hitting $7 actually means in the real world.
So the suggestion is to dedicate a whole section to benchmarking and implied market cap. Give us the context for what that $7 target really requires in terms of performance.
You have to bridge the gap between today's reality and that future valuation.
How would you do that specifically?
First, you calculate the implied market capitalization at $7 a share, and you compare that to where it is now.
Okay.
Then you have to explain what that jump means. What kind of annual revenue do they need from these new AI and data initiatives to support that valuation?
Ah, I see. So if the $7 target means they suddenly need to be valued like a $500 million company, we need to see the revenue stream that gets them there.
Exactly. It's the mechanism of credibility. It turns a magic number into a function of execution.
And building on that, you have to provide sector context. The analysis should benchmark DVLT against a relevant peer.
Another company in the Web 3.0 or data valuation space.
And why is that so crucial here?
Because DVLT is changing its identity, you can't value it on its own history. You have to find a successful comparable, maybe a smaller data company, and cite its price-to-sales ratio.
So you can show how the $7 target actually aligns with standard sector multiples.
Right. It proves the valuation is based on industry practice, not just hope.
And we can't forget the time element. That $7 target is meaningless without a timeline. The analysis needs to specify the time frame. Something like the $7 targets imply a successful execution of their data strategy over the next, say, 18 months.
And it would require a PS multiple of X on a projected revenue of Y.
That's it. That grounds the ambition in professional methodology.
Without that underlying framework, the $7 target is more of a distraction than a proof point. You need to show the reader the structural integrity of the valuation.
And that focus on professionalism leads us straight into our third critique, which is all about the report's voice.
The tone, yeah. The analysis uses some very emotive and urgent language.
It refers to the dip as a golden ticket, calls the sector the hottest sector on the planet.
And it concludes with, the slingshot is being pulled back.
The high-energy, urgent tone, while it is engaging, it risks undermining the analysis's credibility for an expert audience.
An audience that's looking for objective assessment, not promotional hype.
Right. The language is driving the conviction instead of the data.
And that's the weakness. In a formal analysis, that kind of hyperbolic phrasing can make a skeptical reader question your objectivity.
It suggests the focus is on pushing for immediate action, rather than presenting a balanced, conviction-backed argument.
It creates skepticism instead of trust.
So the goal isn't to kill the enthusiasm? I mean, the stock is clearly exciting.
No, of course not. The suggestion is to maintain that strong bullish conviction, but to replace those emotionally charged phrases with objective, data-driven language.
Language that conveys the same level of confidence, but through measured assessment.
Exactly. We want the urgency to be an outcome of the analysis, not a filter you apply to the language.
Let's get specific. What about the question, is this the end of the run? Or did the market just hand us a golden ticket? That's very emotive.
You can rephrase that entirely. Turn it into a declarative statement that sounds more authoritative.
Such as,
Something like, the current pullback provides a clear entry point based on technical support, offering a significant opportunity before anticipated catalysts.
that communicates urgency without the hyperbole. I like that.
And we need to cut the direct commands,
Instead of, do not sleep on Data Vault AI.
which sounds like a stock alert. We can refine that into a more professional directive.
Okay.
Maybe something like, given the convergence of technical support and sector momentum, DVLT warrants immediate consideration. It has the same gravity, but it uses the right language for a sophisticated peer.
Finally, let's talk about the descriptions of price action. Phrases like massive leg up,
It's just hype. You can substitute that with terms that feel more grounded in technical analysis.
significant upward movement, or favorable technical momentum.
Right. The goal is to make sure the tone reinforces the analytical rigor. You want the reader to feel like they're getting privileged insight, not a sales pitch.
The analysis is strongest when its measured tone matches its conviction. Once you define the risks and justify the valuation, the urgency of the opportunity will speak for itself.
It will.
Okay, that brings us to the summary of our critique of the DVLT analysis.